And we turn to our economy section for our GMS focus topic this morning. Just when we thought the rate of price hikes is beginning to slow amid stabilizing exchange rates and global energy prices, a series of public utility fee hikes once again expected to hit South Koreans hard, many of whom are already struggling during this turbulent time. So on today's GMS Focus, we look into the impact of soaring utility rates on inflation, as well as growth projection for the South Korean economy. We connect with Professor Yang Jun-sok at the Catholic University of Korea. Good morning, Professor Yang.
Good morning.
Thank you for joining us. Gas and electricity fees rose sharply in Korea. All headlines indicate the same. Gas fees rose by more than 40% last year. And it turns out many more utility fees, including subway and bus fares to water rates, and even the prices of standard plastic garbage bags are expected to rise this year. So it feels like we're really not getting a break. This has already raised expected inflation to 3.9%. Professor Yang, how do you gauge the impact of soaring utility rates on inflation and the economy as a whole?
Well, luckily, the statistics department of the government actually calculates this for us. Now, in 2022, inflation overall, the so-called headline inflation, was 5.08%, and electricity, gas, and water inflation together was 12.6%. But the more interesting number, perhaps, is that they break down that 508% into how much each category contributed to total that 5.08% inflation. So housing, water, electricity, and fuel, they accounted for 0.93%, nearly 1% of that 5.08% inflation. And then food accounted for just about the same, 0.94%, and transportation accounted for 1.07%. This is a mixture of inflation in those categories, as well as how much a typical household used. So these three categories took more than 3% out of took about 3% out of the total 5.08% inflation, and just water, electricity, housing, and fuel accounted for nearly 1% of that 5% inflation. Now, the reason that perhaps we are concentrating on these utilities, water, electricity, and gas, is that at least in Korea, the prices are pretty much determined by the government, and government has been refraining from raising these prices for quite a long time. First, the prices of these utilities were restrained because of the economic slowdown from the epidemic, and the government was afraid to pile on to the difficulties of the public. And then during the period of high inflation, again, the government refrained from raising the prices because the government did not want to pile on to the already high inflation that was going on at the time. Politically, it probably made sense at the time. They didn't want to make the problem worse. Right. But in the long term, there's something I like to call conservation of loss. If you make a loss somewhere, you eventually, and somebody has to pay for it, and now our payment is coming due. Economists usually believe that it's better to raise the prices when it's warranted. When the costs go up, you should raise the prices because, well, not only does it reflect the prices, so it even if you take a loss, it tends to minimize it. And the reason is when the prices go up, people use less. They try to conserve on the more expensive items. And what we did with electricity and gas is that because we didn't raise prices, we probably used more than we should have, and that increased the loss. And it also has effect on trade balance as well because we import most of our gas and oil. Right. Now, because the government has delayed increasing the prices, we're in a really strange situation where we're raising the prices for electricity and gas when oil prices are holding stable and gas prices are falling. The global fuel prices have fallen or are falling. The West Texas Intermediate oil prices are $78.60 per barrel. It's about the levels of the latter half of 2018. Natural gas prices are $2.74 per million BTUs. Natural gas prices have been on a rapid downward path this year, which began at $7 at the beginning of January. So all utility prices are going up exactly when global prices of fuel are falling. But basically, we're paying more for utilities because of the losses that were incurred last year, because the government did not does not raise the prices and restricted the prices. Korea Gas Corporation is now 9 trillion won in loss. Korean Electric Power Company, KEPCO, is about $30 trillion in loss. And again, losses have to be made up. And these companies are temporarily getting by these losses using borrowing, so that delays their losses. But their levels of their losses have been so high that when they try to borrow the money from the bond market, together with the government deficits that has to be financed through bonds, the amount that they need to borrow from the bond market is so massive that they seem to be driving out private companies, construction companies, from borrowing money. So that's partially the reason why we have so much problem in the bond markets right now.
I do appreciate your angle, conservation of losses. I mean, you limit prices and eventually something's got to give and someone has to pay for those losses incurred. And so we're paying for it now, it seems. And when we could have saved, we didn't. And you have to make up for it later. But what about when we talk about the most vulnerable in society? I mean, there is, of course, this whole angle of maybe we should pick up the bills of those who literally cannot afford to keep warm during the winter seasons. Now, it seems that some lawmakers in the country are calling for extensive government support to help these citizens struggling with soaring bills. Opposition chief Lee Jae-myung namely proposed to earmark over 5 trillion won in extra budget solely to tackle rising utility rates. Other experts remain cautious, saying that releasing money into the market could worsen inflation. So, Professor Yang, what is your take on the matter?
Adding money into the economy right now probably will make inflation worse rather than better. But the government does have some duty to protect the weakest part of the population. If you buy the energy at high prices, you're actually contributing to the loss of those companies. And so you may make the period where you have to support the people for higher prices even longer. But having said that, and also if you add money into the economy, that will probably add to inflation as well. But again, we do need to try to help the weakest part of the population. So if you're going to help these people, you probably need to limit the aid to people who cannot afford it, limit the assistance to the people who actually cannot afford to buy energy, by heating. And then I think what's as important is to have a sort of a team that acts very quickly. So if you have people who are falling through the cracks of the welfare system, they're poor enough that they need to get the money, but if they don't, then you should help those people as quickly as possible before they freeze. Now, so you do need to protect the weakest part of the population, but people above that level, if you give them more money for energy, they'll probably spend more money on something else. And that's going to make inflation longer and worse. So giving money to people who do not necessarily need support to get heating is probably not a good idea, but it's tough telling politicians to deal with that. The entire point of raising interest rates to reduce inflation is that we need to reduce economic activity, and that involves canceling some projects which may not be as profitable. It means slow down in the job market, so slowing down in job creation, and that, of course, is not always politically popular.
Does this imply that we'll see more interest rate hikes at least until the first half of this year? It seems that some economists warn that if Korea fails to tame inflation now, the price we have to pay in the end may be higher than the deficit of public utility fees that we're trying to cover at the moment.
Well, we do remember the period of 1970s when we had literally over 10% inflation for a period in about 5 years continuously, or even more during the 1970s. Even though those periods were a period of very high growth, it did produce a lot of macroeconomic problems. It was a period where people continually also had to have very high increases in income because inflation was rising so quickly. It was also a period where companies which received government aid or government preferences did very well because they were getting loans at interest rates that were cheaper than inflation, but a lot of small and medium-sized companies did not do well because it cost them so much to borrow money from the banks or the financial market. They often had to fall into black markets to get funding. And so this is one of the reasons why some people believe that Korea is so much based on the larger conglomerates, because a lot of small and medium-sized companies were just frozen out during that time period, even though it was more than 50 years ago now. But reason for increasing interest rates, there's two major reasons right now. One is inflation, but inflationary factors seem to be easing. Fuel prices seem to be stabilizing. Global food prices and commodity prices have stabilized. We may have higher inflation in January due to higher food prices because of the weather, and it always food prices always goes up around Lunar New Year's. But even if inflation goes up moderately in January from what we had in December, that's normal. But the point is, inflation is slowing down, but it's still higher than the target rate of 2%. So there is some justification for Bank of Korea to raise the interest rates until inflation seems to die down, until people sense future inflation, the expected inflation dies down as well. And then the second reason why interest rates may need to go up is keeping international capital flows and current markets stable. If the interest rate between Korea and major global markets become too large, there's more chances of a rapid capital outflow, which may lead to economic chaos, and in the worst situations, currency crisis. And it increases the chance of having a problem in exchange rates like what we saw in the fall. So Korea has to keep its interest rates somewhat near the U.S. dollar interest rates. And that means if the U.S. Fed is planning to raise the interest rates, Korea must plan to raise our interest rates as well. And right now, the Fed is giving signals that they will keep on raising the rates until the first half of this year. And they will likely rise another 75 basis points to 5.25% for the United States. Korea is right now about 1 percentage point behind the United States, and we will probably want to maintain that gap, even though Korea may be able to get it the gap a bit higher. Okay. So if the U.S. raises rates by 75 basis points as planned, Korea may raise it another 25 to 50 basis points during the first half of the year. Now, where the problem comes in is the second half of the year. On the U.S. side, the Fed is sort of split on what they'll do in the second half of the year. The doves do not want to raise the rates any further. They say, let's wait and see. The hawks are saying that we need to raise the U.S. needs to raise the rates further until inflation rates gets to 2.0%. And then a lot of Wall Street analysts, even though the Fed has said repeatedly many times that they will not lower interest rates this year unless there is a big bout. A lot of the Wall Street analysts are expecting the Fed to lower the rates at the end of the year, and they may be irrationally optimistic. But Korea needs to prepare for all of those scenarios. Interest rates remaining high but not rising, interest rates rising further, or interest rates falling at the end of the year, though in my personal opinion, interest rates falling at the end of the year seems to be a very unlikely scenario right now.
Professor Yang, in the fourth quarter of last year, Korea marked the first minus growth since the year 2020 amid falling exports, high inflation, and reduced spending. This is while Finance Chief, Chu Kyung-ho projects that the economy is to rebound to positive growth in the first quarter of this year on China's reopening. So with all that's been said, what is your forecast?
Okay, well, exports to China, I do expect the numbers, or at least volume, to increase. But I think we need to get into a bit of technical detail. I hate to do this so early in the morning, but the trade numbers monthly trade numbers we see are value, how much value that we exported. And that value figure for the exports to China is likely to increase, but value figure for the rest of the country, rest of the world right now is likely to go down, and that's because some of the reasons why the trade figures, export figures were so good last year. Remember, we had the highest export values in history, but part of the reason for that is not because the volume of exports increased, but the price of our exports increased because of the global inflation. So even though in the net it harmed us because it increased the price of imports, it helped us a little bit, and it alleviated the trade deficit because our price of our exports are going up as well. But this year, global inflation is likely to come down, and that means the value of our exports will be affected by that as well. And volume of our exports is very likely to go down. If you look at the trade numbers as recorded in the GDP, compare it to trade values that were recorded in the monthly trade accounts, what we see is, as I said, the monthly trade numbers were highest in Korean history, but the volume numbers, which are more represented in the GDP numbers, because GDP numbers use prices for a given year rather than not prices for a given year, not prices for a given year, but prices for a reference year, because they want to cut out the effect of inflation. Well, the export numbers for the GDP, it actually went down by 5.8%. Now, part of that is because the export numbers in the GDP include services and labor, while the trade numbers only include goods, merchandise trade. But still, one number is higher than ever in history. The other number is minus 5.8%. So that shows that international inflation did play a lot of role in Korea's exports last year. So having said that, prices of Korean exports are probably going to go down this year. Volume of Korean exports are likely to go down to everywhere except perhaps China. So I think overall exports for Korea is probably going to come down this year. And then other factors that make up the demand for Korean goods, domestic consumption. Last year, domestic consumption was helped by revenge spending. We're probably going to have a bit of a revenge spending this month because we're getting rid of the masks, but I don't think it's going to be too large. And investment. In recent years, investment tends to follow demand, and we're not going to have a lot of global demand or domestic demand. And then the high interest rate, the high household debt, and also let's remember Korea has very high corporate debt. So all those things are not going to make consumption and investment rise by very much. So domestic demand and foreign demand are likely to be very low this year. If not negative, then at least growing very, very slowly. And that's coming atop of long-term factors, the falling potential growth rate. Even if we have a normal year, it's probably going to be around a low 2% range. Right now, the prediction for this year tends to be around 1.6 to 1.9%. So we'll definitely be going lower than potential growth, but not as far back from the potential growth rate as most people think. And so the only tool that the Korean economy may have left is government consumption, government expenditure. But the current government has pledged that because we've spent so much in the past and our government deficit and government debt had piled on so high, they will refrain from increasing government spending this year. But that may be the only tool that we're going to have left this year.
Thank you very much, Professor Yang, for such a thorough insight. We'll speak to you again next week.
Thank you.
If you're listening to our program using the podcast service, just a reminder that we do go live Monday through Friday, 7 a.m. Korea Standard Time. So tune in and help us make the show more informative by giving us your input. See you bright and early on Good Morning Seoul.